remains incredibly hot, and we've seen kind of competing commentary on how much concern you need to have. We're going to talk a little bit later in the show with Nick Nanos about the role that expectations of the rising house price are having on consumer confidence across this country and the kind of self-fulfilling prophecy that can have. But we have certainly seen strong growth in the condo real estate market as well. CIBC is now predicting investors will play a key role in reversing the slump that we've seen in that condo market recently. So the question is, where does that market go from here? Nobody better to ask than CIBC's Benjamin Tal. He's with us now. Benny, great to have you with us. So what do your data show about the condo market? What are you seeing?
Yes, as you know, until now, it was all about low-rise, detached housing. Everybody wanted to buy this big house with an office. Since December, we started to see something happening, and the condo market, all of a sudden, that until now was kind of soft, started to take off. And we are seeing a significant acceleration in prices, activity, demand, and supply is not there. So we know that a lot of it has to do with the investors, and what we are going to release tomorrow or maybe 2 days from now is basically a data set on what's happening with investors, basically taking information on transactions and mortgages. And with Urban Nation, we are putting together basically an introduction to the psyche of those investors. What's in their head? Why they are investing? And we find all kinds of very interesting stories there. For example, about 40% of them are in negative cash flow, but they are still investing. And the question is why. That's interesting.
So, and let's just start with the costs. I mean, people tend to be fairly sensible, really, when you get down to it, Benny, about where they're going to allocate their capital. When you compare some of the costs, the mortgage plus the condo fees that go along with it, to your average rent, it does start to argue in favor of the condo market, does it not?
Exactly, and you can see from this chart that it's basically breaking even, and the condo market is getting more attractive given the valuations of low-rise detached houses that I believe are reaching a resistance level in terms of prices. So the more affordable channel is the condo space, and that's what investors are doing. But it's more than that. As you can see, we have a situation in which the rent that you get is basically more or less the same as the mortgage and the cost that you pay. So you're breaking even. But there are about 35 to 37% of investors that are actually in negative cash flow. They are actually losing money on a monthly basis. Some of them a lot. Some of them more than $600-700 a month. And the question is why? As you can see from this chart, there is a significant portion that is negative cash flow. And we ask them, and they say, no, you don't understand. We are not losing money. Somebody is paying a portion of our mortgage. Over time, the price of this property will rise, and we will be better off. I want my son, my daughter, to be able to live in Toronto 10 years from now. That's why we are doing it. And you know what? They are right.
They're right, as in that is a sensible investment to make on behalf of that next generation?
Yes, it's not a speculation. It's not, expecting prices to rise by 40% tomorrow. It's taking a long-term approach. If you do that, and you say, you know what, let's look at Toronto 10 years from now. Toronto will not be affordable. If you think that Toronto is unaffordable now, you wait. Toronto is becoming like Berlin, like London, like Manhattan. It's becoming more and more unaffordable. And therefore, we know that our kids will struggle, and that's why I'm talking about the option of the rental availability in the market. Basically, that we need rental solution in order to ease the affordability crisis that we are in. But if you think for a second that Toronto will be affordable tomorrow if there is a correction of 10% in prices, that will not be the case. We all know that. And many of those investors, look at the picture and say, you know what, 10 years from now, I have young kids now. I want them to live in Toronto. I'm investing now, and let's see what happens. I think that's what they are telling us. And by the way, just one more point here. We did the same exercise with Urban Nation 2 years ago. And this is, by the way, Amanda, this is real numbers. This is not a survey. This is actual transactions versus actual mortgages. It's not out there. This study will reveal those numbers. 2 years ago, we did something similar. 40% of people were in negative cash flow back then, and guess what? They didn't sell. So clearly, many of them are taking a long-term view, despite quote unquote, losing money on a monthly basis.
So interesting, because we, of course, have known that there were investors in the condo space, and over time, policymakers and others, again, you're without a lot of hard data. There's a lot of guesswork that goes on into just who owns what in this space. So I'm very happy that CIBC is putting together real information. There's been this sense that it was foreign money and that you needed to keep the foreign investors out. I think what you're saying is we may find that there may be some of that, and it may well be, again, for a next generation and their ability to live in those condos, but there may also be a lot of domestic investors with the intent to one day live in that unit.
Yes, absolutely. And by the way, this information is coming CIBC, Terranet, and Urban Nation together, a joint effort. So it's actually good that we can put together this database. I think it's very important. It will educate investors and the public as a whole when it comes to the condo space. Yes, everybody's talking about foreign investment, and I will not be surprised if the government will go after foreign investors as part of trying to slow down the market. That's fine, but that's not dominating the market by any stretch of the imagination. When we talk about condo investors, we are talking about domestic investors. Basically, people are looking for a way to get return. And by the way, this is not a replacement for a GIC. This is, for many of them, a long-term play.
So obviously when we look back at that, the costs of carrying a condo mortgage plus the additional costs, the cost of mortgage could well go up. That could just happen naturally, Benjamin. I think we think that it will happen, right, as the economy firms up and interest rates come up a little bit. What do you think could cool down, if anything, the overall housing market? We've had this ongoing debate about how speculative it is and is it overheated, and that, you start to think policymakers may take a more active view of it. Do they need to, or do you think those forces will happen on their own?
I think that the most important force will be interest rates, because that's really the number one factor. And if you have an increase in the 5-year rate of another, let's say, 50 basis points, that will do the trick to slow down this market, because clearly people are capitalizing on extremely low mortgage rates, able easily to pass the stress test. In addition, I think that you will see other things happening, maybe something to do with a blind bidding process, maybe something to do with making sure that banks don't lend above a certain threshold with a certain loan-to-value ratio, all kinds of other things that will impact the picture at the margin. But really, interest rates in the short term will be the number one factor, and long term, clearly more supply. That's what we need.
And do you think that, obviously supply has been a piece of the picture here. What does that do then to this part of the market, which hasn't had the same kind of speculative fervor as other parts?
Yes, I think that if you look at the overall situation, the question I'm asking myself is to what extent what we are seeing now is a speculative bubble, or is it supply-demand mismatch? I think that's the way to look at the situation. At the margin, of course, when prices are starting to rise, people are trying to take advantage and speculate. But this is really something at the margin. It's not really dominating the psyche of this market at this point, not yet at least. It's really about the supply-demand mismatch. And people are looking at interest rates. They know, as you said, that interest rates will rise. So basically, they're stealing activity from the future in order to be part of this low interest rate environment and take advantage of it. So that's one of the reasons why we see a huge increase in demand, while supply is so limited. Because you cannot really build so many houses so quickly, especially low-rise. And the other factor is that many people are really not very enthusiastic about listing their units at this point of the game. They are waiting. So those are two forces that lead to this mismatch in the market that leads to the huge increase in prices.
Really interesting, Benny. We appreciate it, as always, you bringing it to us first. We'll look for that research from CIBC. Benny Tal, Deputy Chief Economist at CIBC Capital Markets.